Welcome to Exam Bites. Let's discuss about RBI Monetary Policy Meeting 2024. Why in the news? In its first meeting after the Union Budget, the Reserve Bank of India's Monetary Policy Committee, MPC, decided to keep the policy repo rate unchanged at 6.5% for the ninth consecutive time. Of the 6 members of the MPC, voted in favor of the decision, which is aimed at taming inflation. The committee, under Section 45ZB of the amended RBI Act 1934, the central government is empowered to constitute a 6-member Monetary Policy Committee, MPC. The MPC will determine the policy interest rate required to achieve the inflation target. The first such MPC was constituted in September 2016. Members of the MPC: the RBI governor as its ex officio chairperson, the deputy governor in charge of monetary policy, an officer of the bank to be nominated by the central board, 3 persons to be appointed by the central government. Functions of the MPC: setting policy interest rates. The primary function of the MPC is to determine the policy interest rates, specifically the repo rate. Inflation targeting. The current inflation target set by the government is a Consumer Price Index, CPI, inflation target of 4% with a tolerance band of plus or minus 2%. Economic analysis and forecasting. The MPC conducts thorough analysis and forecasting of various economic indicators, including inflation, GDP growth, employment, fiscal conditions, and global economic developments. Decision-making. The MPC meets at least 4 times a year to review the monetary policy stance. Key outcomes of MPC 2024. The MPC decided to keep the policy repo rate unchanged at 6.5%. The repo rate is the rate at which the Reserve Bank of India lends money to commercial banks in the event of any shortfall of funds. The Standing Deposit Facility, SDF, rate remains at 6.25%, while the Marginal Standing Facility, MSF, rate and the bank rate stand at 6.75%. The SDF is a liquidity window through which the RBI allows banks the option to park excess liquidity with it. It is different from the reverse repo facility in that it does not require banks to provide collateral while parking funds. The MSF is a window for banks to borrow from the central bank in an emergency situation when interbank liquidity dries up completely. The MPC also decided to remain focused on the withdrawal of accommodation to ensure that inflation progressively aligns with the target while supporting growth. An accommodative stance means the central bank is prepared to expand the money supply to boost economic growth. Withdrawal of accommodation means reducing the money supply in the system, which will rein in inflation further. Food prices drive inflation. The headline inflation, after remaining steady at 4.8% during April and May, increased to 5.1% in June. The headline inflation, primarily driven by food inflation, remains stubborn. Core inflation, CPI excluding food and fuel, moderated, while the fuel group remained in deflation. Inflation is moderating, but the pace of disinflation is uneven and slow. Still, there is distance to cover to align inflation with the target. GDP forecast. Real GDP growth for 2024 to 25 has been projected at 7.2%, with the first quarter, Q1, projection at 7.1%, Q2 at 7.2%, Q3 at 7.3%, and Q4 at 7.2%. Real GDP growth for the first quarter of 2025 to 26 is projected at 7.2%. Other announcements made during MPC 2024. Transaction limit for tax payments via UPI hiked from 1 rupee lakh to 5 rupees lakh. The RBI announced an increase in the transaction limit for tax payment through the Unified Payments Interface, UPI, from 1 rupee lakh to 5 rupees lakh per transaction. The move will further ease tax payments by consumers through UPI, which has become the most preferred mode of digital payments. The enhancement of the UPI limit for tax payments will strengthen the tax collection system, reduce the cost of tax collection, and make tax payments more convenient for taxpayers. Creation of a repository of digital lending apps. In a bid to protect customers from fraudulent players in the financial services sector, the Reserve Bank of India is creating a public repository of digital lending applications, which will be available on its website. This measure will put some checks on the digitalized loan shark business. The aim of the RBI is to sensitize the public about unauthorized digital lending apps and to prevent them from falling prey to digital fraud. Focus more on deposit mobilization via innovative products. RBI Governor Shaktikanta Das has expressed concern over the shift of household savings from banks to alternative investment avenues, leading to slower deposit growth compared to credit growth. While deposits grew by 11.7%, credit growth increased by 15.5% as of July 12. The RBI governor urged banks to attract deposits by offering innovative products and leveraging their branch networks to avoid potential liquidity issues. Can't ignore food inflation pressures. The economic survey for 2023 to 24 suggested excluding food prices from headline inflation. It argued that food prices were keeping the CPI-based inflation high and delaying interest rate cuts by the RBI. However, the RBI governor disagreed, emphasizing that food inflation, which constitutes about 46% of the CPI basket, cannot be ignored due to its significant impact on the public and overall inflation. He acknowledged that while the MPC might overlook temporary food inflation spikes, it must remain vigilant against persistent food inflation to prevent spillovers into other areas of the economy. The governor mentioned that the National Statistical Office, NSO, is conducting a survey to reassess the CPI basket, which may influence future decisions on the weight of food, fuel, and core components in headline inflation.